Thank you for joining us today for the VU Ltd Practical Guide for Getting Back to Work series. The focus of today's webinar is on the financial and operational issues of returning to work. I'm Victor Ubogu, founder of VU Ltd, a sports travel and hospitality business. Alongside me are Charles Mayhew. Charles joined Moreton Smith in 2002 as a major shareholder, which was sold to Marston Holdings in 2015. Now a director of Global Credit Recoveries Ltd, and on the advisory council for the Chartered Institute of Credit Management. Previous roles include chairman of the Committee for Conferences and Seminars for the Institute of Credit Management, European Board of the ICTF, and lectured across EMEA on international debt collection, asset recovery, and arbitration. Hi, Charles.
Morning, how are you doing?
All good, all good. James Nicholson, with 40 years in the coffee industry. James is the owner and managing director of Frankie Coffee Systems UK. An impeccable leader, cautious but adventurous, very successful and totally dedicated to his employees as well as his customers and suppliers. He is in a people's business, serving every commercial sector with a continually developing product range and meeting the needs of his customers. Hi, James.
Hi, Vic. Thanks for your kind words.
As well as my former captain at Bath England Rugby, Phil de Glanville. Phil is co-owner and director at Hanover Fox, a quality-driven executive search consultancy, operating at senior and board level across a range of sectors. Phil specializes in consumer goods, IT and technology, and not-for-profit sectors, including education, charities, and sport. Phil currently sits on the main board of the Rugby Football Union and is the RFU's representative on the Professional Game Board. Hi, Phil.
Hi, Vic. Looking forward to it.
Excellent. At this point, we don't know when live events will be back up and running as we know it. I've had to adapt from sports travel and hospitality to bulk selling PPE, masks, gloves, and sanitizers, health and safety e-training modules, as well as Teacup, a self-reflective well-being app. Compared to live sporting events, it's not that exciting, but I've had to adapt. My staff have been on furlough since the beginning of April and will continue to do so until the end of July at the earliest. So, James, with a business operating nationally with over 150 staff, some office-based and some on the road, with field engineers servicing coffee systems at client locations, can we start with how you went into lockdown as a business?
Yeah, I mean, for me, it was relatively simple. The government effectively took 95% of our turnover away in their Friday message. So I suppose after a few fraught telephone conversations over the weekend, we called all members of staff together via a conference call on the Monday. And the decision was very easy to make in the sense that we had to close the business and really push the message out to all of our people to follow government guidelines and stay at home. We placed 95% of our people onto the furlough scheme. We kept 10 here really to cover each and every eventuality and really to create, I suppose, a roadmap of our next steps for what was then an unknown period of time. So, you know, I had input from finance, from HR, from sales, health and safety and compliance, service operations, all the key areas of the business were involved. You know, it's hard enough being a manager, being a good manager, but when something like this arrives, everything really goes against any form of risk management training. And you really do need a good team around you to support and help as best you can. So I suppose from the third week of March, we closed. And since then, obviously, we've lost 25% of the year. And we are where we are. There's no real there's nothing really that I can explain and help anybody in that sense, apart from keeping a good team of people around you who are very supportive and are always looking from a positive aspect.
Thank you, James. Now, with businesses having shut down for a few months, I know from my own experience at VU, which is possibly the worst affected sector of travel and hospitality, income has been nil. I mean, coupled with having to pay out refunds for cancelled events and office rent and bills, it has been an outflow of funds. Managing finances is crucial as businesses plan to reopen. I mean, the Chancellor announced various schemes to aid businesses through these very challenging times, including grants and government-backed loans, to which I'll add a link to the post-webinar email. I mean, Charles, you've built and sold businesses in the past, and as an expert in credit control and debt recovery, can you give us some practical ways of navigating finances and the pitfalls to avoid?
Yeah, I mean, we're hearing today, thanks Vic, that obviously the GDP is down 25%. I was listening to LBC as I just came out of London, and they're talking about a real recovery is going to be perhaps back to pre-COVID levels in perhaps 4 years. As I mentioned, I'm on the council for the Chartered Institute of Credit Management, so it's quite funny that the credit managers and the finance directors that I deal with are suddenly finding it very important to talk to their people as to where the cash is coming from. And our ex-chairman of the Chartered Institute was Philip King. So we used to say cash is king, and it's perhaps never been more so. So I've got some Super 7 tips to credit risk assessment from the Chartered Institute of Credit Management to kick off with. And the first one is the capacity. Does your customer have the financial capability to repay their commitments? As I mentioned, I've been dealing with international debt recovery for the last 26 years. And what is incredibly important is relationships, and James was mentioning it with his customers. If you can imagine, it's quite easy just to revert over to either our legal friends or a debt recovery agency like ourselves. And if they go in there hammer and tong, it just ends up in a long-winded, expensive legal battle to recover your funds. So there are some clever ways that you can actually do this. So 7 tips. First of all, check the capacity of your customer to repay their commitments during this difficult time. And again, adding to that, the most difficult thing is to get a valid credit report, because obviously in the UK, we get reasonably up-to-date credit data, but for those customers who are tuning into this Zoom, it's very difficult to get up-to-date export information. And James and I touched on that last week with dealing with Pan-Asian companies. So check financial data using a credit agency report and company accounts. And obviously you've got to make sure you understand the figures behind the results. Trading and profit figures of 6 months ago are not going to bear any resemblance to today. You've got to check, you've got to know the character of the person that you're collecting the funds from. You know your customer. We see this KYC logo everywhere. Know your customer. And it's vitally important, obviously, alongside anti-money laundering. There's a lot of fraud going on now. And that's one thing that we're seeing in the credit management phase. The latest one that I noticed last night was that people are taking out loans in business owners' names. For example, classic car dealers and people that are selling high-end cars are having loans applied for themselves in their names, transferring the money as a BBL loan, and then going along to collect the car, having had the money transferred from the government up to the £50,000 bailout loan. So that's something to watch out for, obviously, the fraud side. Conditions, we're acutely aware of how external conditions are affecting our businesses, but you can't apply a blanket approach to all. Think about how specific changes affect each of your customers and match your customer's profile to the conditions, and it'll help you manage the influx of big data more coherently. Collateral, is this the time to be asking our large clients for a guarantee for payment? From our point of view of recovering funds across the world, it's only useful if it's underpinned by a low risk entity. If it's tied to third parties such as a parent company or a director, underwrite the debt, check that there is the strength in the business or person offering this assurance. Again, something we're doing in the credit management phase at the moment. If people are unable to pay, and we've checked to see if the debt is payable and they do have the funds available, as best we can, we're asking for some written confirmation that the payment plans will be stuck to. Because at least if it does go pear-shaped, for want of a better word, later on down the line, it allows us to legally have documents to say that the customer admitted the debt, that they were aware of the debt that is owed. So that's also helpful. See what assets the customer has got. Capital, the assets of the customer can help influence your credit decisions. Knowing the asset base not only assures you of their financial strength, but it can pinpoint potential sources of security. So number 7 on the tips is really common sense. We're all in business. We all do business with people. So if you've got a gut feeling that something's wrong, it's normally correct. So they're my quick 7 tips, and I'm happy to expand more on the debt recovery side if people are having problems, both in the UK, domestically or overseas.
Thank you, Charles. James, when did you start planning the reopening of your business? And can you walk us through the practical steps you took and pitfalls to avoid?
I'll try. It's a long time ago. I suppose having watched countries like Spain, Italy, France, who all closed down 2 weeks before the UK did, we were already looking at various programs to try and create a roadmap of essentials. You know, I've scribbled 5, 6 items down that we really focused on, and firstly was our supply chain, to make sure that our suppliers had enough stock, and obviously from an international point of view, deliveries were still operational, as and when and how quickly they could come back. We also had to look at suppliers in terms of their viability, their feasibility. Were they strong enough to be able to sit through the current situation? So from a financial point of view, were they strong enough? The other area, which of course we all know about, is PPE, and it's not just being able to have it for an immediate start off. It's having a supply for a continuous period of time. We actually took in our first delivery of face masks, I think, during the 2nd week of April. We managed to get hold of some branded masks from Germany. So that was our first step. Primarily, it was to make sure that we had enough for all of our people to return safely, but also to make sure that they felt safe returning. So far as our field service guys are concerned, you know, it's not just PPE, it's things like barriers, creating a 2-meter distance in working locations, now whether that's in the supermarket or the fast food store. And of course, then creating what we had to do with regard to our own office, putting in one-way systems, additional breakout areas, making sure that there was plenty of signage, not only on the walls, but on the floors as well. Really to make sure that this 2-meter distance was adhered to in every single part of the building. And once we're happy that we've satisfied virtually all the government recommendations, we then started to bring people back at staged interviews, sort of 30% of the time for a 2-week period. And this started around about May the 12th, and built up to a full operation, full reopening as from the 22nd of June. So there was a huge amount of effort put into making sure that all of our people felt safe, and we were actually geared to cover any eventuality. Another area which was a bit of a challenge was risk assessments. Now, because we deal with, you know, the office, the fast food, the supermarket, the travel sector, the airport, the hotel, the pub, you know, our own office, our own field service engineers, Of course, employees working at home have to have a risk assessment. All of these had to be created, all slightly different, but realistically all with the same meaning. And again, trying to cover off and meet all government requirements that were put in front of us. One thing that I think is absolutely key is communication, and communication with all of our employees. That's not just the management team that were here throughout with myself. It was making sure that team leaders were speaking to everybody on a weekly basis. Senior management were calling as often as possible, but always having a positive attitude, keeping morale up, morale boosting and encouragement, but also good to talk about experiences outside of work related things. And it's really trying to embed a one team experience that we have here. You know, this is, everybody works for one another. Everybody is involved at some point throughout the whole business. Another area we've had to try to cover is we've had to adapt and develop touchless operating screens for customers, so that you can now choose a beverage from your mobile rather than touching the actual machine itself. And I suppose one of the or a few of the things that we kind of asked ourselves was, how can your business change and adapt to a new working environment and embrace the change positively, but at all times avoiding any form of knee-jerk reaction. Look at the costs and plan for a 5-year term and not a 5-month term. There's going to be some tough decisions to make in the coming months, certainly. And I suppose the other big area that we had to look at was our credit control. You know, we all know cash is key, and to keep that flowing. We run a fairly tight ship here and have a relatively healthy cash reserve, but still trying to accommodate and I suppose meet with some of our customers' needs. And we've had requests of 3-month holiday periods and payment plans over 18 months. And this is not just from individuals, this is from international and national companies. We set out that we'd look at extending credit for a 3-month period, 3 equal payments. You can then easily slot it into the cash flow here. But whatever, I would suggest whatever you decide, you stick with. I'm convinced there's more fatalities to come. You know, we've already seen some very big names in the high street. And as Charles has just alluded to, there's plenty of support mechanisms in place to assist where necessary. The government's obviously buying a lot of classic cars at the moment, Charles, which are not ideal, but I came across a slogan last week, which was survive, revive and thrive, which I thought was extremely apt for this moment, and trying to put a various roadmap into that sort of slogan, I'm sure it can only be beneficial for everybody concerned within your business.
Thank you, James. That was very useful. There's a comment on the chat box from Kevin Parker. Do the panel think, what do the panel think is the likely impact on capital availability and investment planning, bearing in mind that most organizations are wanting to transform to adapt to the challenges, i.e. build better digital capability, and this comes at a cost. The challenge being to deliver more, faster, at a lower outlay with less resources. What are your thoughts on that, Charles?
Well, I think I did see that many businesses who were thinking about expanding have taken the bounce back loans at 2.5% interest, if I'm to be corrected, but 2.5% interest, which is a better rate than you can get at the bank currently. So that's why I think the government have seen a real uptake on those loans. On the digital capability, Kevin, again, from a credit management point of view, I can discuss this from the members of the Institute of Credit Management, Chartered Institute. Many of them are investing heavily in bolt-on tools to SAP and Oracle, the big ERP platforms, to enhance their cash flow, because they need to be able to touch people remotely, talk to their customers in a better way. So I think the answer is that now we've seen an uptake. I've got some friends of mine who are in the software business for a variety of software products, and it's gone berserk. The market is booming, where people are taking on. So people are investing heavily, and there are cost savings to be made there as well. Sadly, most of the time with those types of software, it's headcount that gets reduced because you can do more with less. So people are investing heavily in products like Remilia, where where it applies all of your cash automatically. And again, this is not for SMEs, it's for larger businesses, but there are smaller products out there on the market as well, which are doing exactly the same. So what I'm seeing is people are investing heavily into their digital capability to ensure that they survive. Good question.
And Beck, I might add to that with my Rugby Football Union hat on rather than my Hanover Fox, that the RFU looked at extending its loan facility too, and we explored the bounce back loan as well as loans from the bank, and actually are going with the bank option for the time being. But we've extended our facility. We may not use it from 100 million to 150 million. Basically looking at the projected cash flow challenges that we have going forward. As I say, we're hopeful that we don't need it, but we needed to have that in place. So certainly all the conversations with the banks have been, been fairly challenging, as they've had a fair amount of people to deal with, I think. So a huge number of people kind of looking at how just to extend that credit. And the challenge of, as long as you can afford to repay it, the borrowing is in the short term is definitely the way to go.
I think they've had, was it 1,074,000 bounce back loans? Yeah, and I think directors have grabbed them because they are, even if they don't need them, they know that they might need them, and I think that's what's been happening, which makes sense.
Oh yeah, it's definitely good to plan, going forward. Phil, just coming back to you. I mean, how has lockdown impacted on your business, and have you had to change how you operate?
Yeah, well, Vic, I've got two hats on. I'm a director and co-owner of Hanover Fox, which is an executive search company. A small organisation, very different to my non-exec director role on the board at the RFU. So the scale and the challenge, two different organisations and completely different challenges. I mean, if I take the Hanover Fox example, recruitment was frozen overnight, as any kind of discretionary spending was, as James and Charles have been talking about the need to protect cash and liquidity. It's starting to open up again now, I think, but certainly kind of overnight. So as a small business, income effectively has been zero, like yourself, Vic, for this period. So we have got relatively small overheads, and our business model is pretty good from that perspective. So it has been all about just protecting the cash where we can in that short term. But we also had some, and this is probably the key point. We had some bigger ticket investment plans already prior to COVID, which we still carried on with. So we rebuilt our website, we've changed our IT system, and put a kind of updated. So I think you just got to be careful that you don't just cut off all of those kind of longer term strategic investments that you were planning to do already. If the business case is there for them, still, as long as the cash is, liquidity is good, carry on with those. And actually in a funny sort of way, because we haven't been doing any assignments and actually running many transactions, just a few, we've been able to really focus on that and make sure we get them right. And then the importance is about maintaining relationships with people, you know, accepting that, you know, recruitment assignments are not going to be in the main running, you know, during this period, certainly March, April, May. It is about maintaining relationships with your clients and keeping that dialogue going, because, you know, everything changes so fast, and change, you know, is potentially going to need new senior people. Added to that, we've had the challenge of moving completely to interviewing candidates online. And actually Zoom has been our most common model. You know, there's a few others around, obviously Microsoft Teams and others, but Zoom for the vast majority of candidates has worked really well. And that's kind of, we've been interviewing all over Europe from using Zoom. So it's still not quite as good as face-to-face, but it has actually sped up the whole process, particularly the early process in terms of engaging with candidates. So that's been excellent. On the other side of the equation, on the RFU board, you know, we moved from 7 meetings a year to weekly board calls. The change and the pace of change and the government advice meant that we've had to do that. And we've got 7 different scenarios in terms of looking at the matches for the season we're coming into, 2021, which is a very big year for the RFU, with a huge number of games at Twickenham. And the RFU is like a rugby club. You know, it's based on the number of games that we can play at Twickenham, directly feeds through to the revenue that we generate. 85% of the RFU's income comes from the men's 15-a-side game at Twickenham. When you look at the broadcasting and the hospitality and the tickets and yeah, and the sponsorship, that's where it all sits. So overnight, we lost all of that as an organisation, potentially with none of those games going on. But as it's kind of changed, and suddenly the 2 meters gone to 1 meter plus, and you might be able to have crowds, and will we play the Southern Hemisphere in the autumns or not? If we don't, who will we play in terms of Northern Hemisphere teams? So we've had a whole load of different financial scenarios at the RFU, none of which, you know, as we stand today, you know, we know what's going to happen. All we know is that the Premiership is starting on August the 14th, 15th, but we're still, you know, not clear around the England games and that programme, and how many people are going to be able to come and watch it. So on the RFU side, all the 3/4 of the staff were furloughed during that period. I think that brought huge challenges, I think, for some people. You know, being at home, it's fine if you're working at home, but when you're furloughed and not working, I think certainly big chunks of the teams really struggled, particularly, you know, with your purpose and what you're doing when you get out of bed in the morning, and you know, what you're doing on a day-to-day basis. Now we've just announced, you know, on the back of those, you know, pretty traumatic revenue reductions going into next year, that we've gone into a consultation process with a big number of those staff for a redundancy program in the next month too. So you know, everywhere it was all about reducing costs at the RFU, and we took a decision that we try and share that across the whole organisation equally, and every kind of partner that we're supporting. So our agreement with the Premiership, the relationship we have with the Players Association, everyone is going to take a little bit, it'll be a lot of the pain, rather than you know, completely stopping everything and just carrying on with a few little silos. So a very different scenario with the RFU than with Hanover Fox. The crucial thing, I think, with both of them was about that frequency of communication. You know, weekly board meetings, the professional game board, which is the Players Association and the Premiership and Championship and ourselves. We moved to weekly calls on those two, and that's managed the whole return to play for the Premiership. And likewise with Hanover Fox, you know, weekly communications, keeping people in the loop. You know, nothing hidden, you know, open book in terms of what the financial challenges were, so that everyone can understand, I think, what's coming down the line. And it has been, very difficult, certainly from the RFU's perspective.
Wow. Thank you, Phil, on that. I mean, just picking up on the RFU and the sort of the global rugby theme. I mean, there's this talk of a global fixture. And how's that coming along?
Well, it was, I mean, in the middle of there's nothing like a pandemic to get all parties across the globe talking more effectively, and that has definitely happened. So the Northern Hemisphere unions, the Southern Hemisphere unions that had kind of set up a working group and looked at how they could. And the whole principle is to have an aligned Northern and Southern Hemisphere international competition, but also an aligned international competition with the club competition. We're trying to reduce the duplication between those two, particularly in France and in England, where the whole kind of infrastructure is very different to the Southern Hemisphere, but also in the Southern Hemisphere. Those provincial competitions, Super Rugby, dovetailing nicely with the international window. So the basic principle is that instead of having 3 international windows during the year, we combine them into 2, an autumn one and a spring one. And we align the Northern and Southern Hemisphere international windows to both those windows. And then we have more of a meaningful competition around the autumn period in particular, which actually recognises that everyone is playing everyone during that time, and it's kind of moving towards a kind of a global league at an international level, not completely, but that's kind of where it's heading. The complexity on that is obviously, particularly for us in the UK, where do the clubs and the fantastic club competitions fit into that? And so those conversations are going on at the moment, and I think we're reasonably confident they're heading in a positive direction. There's enough benefits for all, and it needs to be benefits for all, that we can all come out of this with a win-win. But as ever, there's a little bit of politics to play on the way.
Yeah, I'm sure if you guys just write the clubs a big check, they'll very quickly move to playing in the summer. So it comes down to money.
The finances are obviously a huge aspect of that, but player welfare is also a big one, and particularly for those players that play for both their club and international, that group of 40-45 players, trying to make sure that they are not burnt out is also pretty important.
Okay, we've got another question come in. What lessons have you learned from this crisis that you'll be able to apply to future work situations? We'll get to you, James, from that to start.
I think we've certainly had a much stronger team building going on over the last 3-month period. I think our communication has certainly got considerably better. We've also put in new systems over the last 3-month period. So new software systems. I believe we've become much leaner. We've certainly become more efficient. But of course, the proof's in the pudding for that one over the next 3-month period. I think our team has been built to a much stronger level, and we do definitely operate more as one team rather than in silos. And certainly from my point of view, that's probably the only good that's come out of this over the last 3-month period. Communication. All the time, communication, and being very open and honest with everybody. And as I said earlier, don't make knee-jerk reactions. It's key that you've got full support. Certainly, from my point of view, I've got full support of every single employee, and that way, certainly the company will thrive, and it will get much stronger the whole way through. But it is going to be very difficult. You know, I suppose we're lucky in the sense that we've got some very good cash reserves. So from a, if you like, a mental health point of view, we've tried to keep everybody on a full salary. We've communicated very well, and we try and look after our people. We really do, and I think that has certainly developed to a much stronger bonding over the past 3-month period. But lessons learned, many, and hopefully we never have this sort of situation again.
I guess.
And I think if you kind of go, Vic, if you go back to, obviously we look from a sponsorship perspective, back at the banking crash in 2008-9, and obviously nothing like this. But when you're in that scenario, it always feels a bit doom and gloom when you're in the middle of it. But actually, relatively quickly we came out of that as a country and as a as a world. So. Yeah, it is very different now with this pandemic, and who knows, where future spikes are going to come, etc. But I think there's definitely a sense now of kind of let's start to battle our way back into some kind of semblance of normality. We can't keep on living. Let's minimise the risks, but we can't keep on living in hiding away from each other, and so. Certainly, I sense a kind of feeling amongst clients that we need to just battle through it.
Okay. Charles, anything to add?
There we are, back again, back in the room. James mentioned it. It's all about the people. Phil dealing with staff, etc. Getting the right people is the most important thing. Staff engagement. I'm certain of two things. First, the last few months have been extremely tough for our staff, whatever their particular experience of lockdown. And second, we need more than ever engaged, enthused, talented people than ever before, and perhaps ever will, hopefully. You need their insight to help you develop brilliantly detailed plans for a COVID-safe transition. You need their support to operationalise those plans, and also to spot where they're not working, which has happened, and to propose and make changes that ensure that they work. And you need them to help you transform the whole thing into a business that succeeds in the post-pandemic world. Leaving lockdown safely is necessary, but not sufficient. The organisations that lead their markets in 2 years' time will, I'm sure, leave lockdown safely, strategically, and with brilliant staff engagement. It's all about the people.
Okay, thank you, Charles. We've got another question come in. What do you think is the bottom line on moving to a remote working or hybrid model versus office-based model, taking into account the cost of offices, travel, productivity, etc.?
Shall I jump in first? Only because we've been working remotely at Hanover Fox, prior to the pandemic, and it's a modus operandi I've used for over 10 years, and so I've always been a big fan of it. So you've probably not had the same level of change as other people who've gone to home from an office. But certainly, a lot of people I talk to, having been forced into this, are looking at it, as much more of a kind of balanced model. I think it depends on the team. If you're a new member of the team, you would want to be, where others are, to build those relationships with them. If you're in any kind of sense of innovation and brainstorming set, whatever, again, you want to be with those people. But if you've got an experienced team and those relationships are already there, then why not move to a 3-2 split, and a couple of days at home and 3 days in the office, or vice versa. I see a lot of organisations, including banks. Obviously it's different if you're making things and you have to be in a manufacturing facility. You physically have to be there. But if you're in a service sector, then definitely, I think a lot of people thinking of that move to a 3-2 split.
Okay, thanks, Phil. I think we're just about got enough time for me to summarize. I mean, the key points that I'll be taking away from today's webinar are: cash is king, know your customer, credit agency reports, make sure that they're up to date, get a payment plan, common sense, and communication with your staff, very important. Focus on your supply chain, keep in mind liquidity and keep protecting cash, as I said before. And I love the stuff that James came up with, which was survive, revive, and thrive. Thank you to Charles, James, for sharing your experience and practical advice. Thank you all for attending. I'll email the link of today's webinar. It'll be great to get your feedback, and please share with your colleagues. The webinar video will also be posted on YouTube and Instagram TV. This webinar will also be posted as a podcast on Apple, Spotify, and other platforms. If you found it useful, please like, share, and subscribe. You're all invited to our next live Zoom webinar, a practical guide for getting back to work series, which focuses on marketing and the art of hustle. This will be on Tuesday, the 21st of July at 12 o'clock, where I'll be joined by Paul Williamson, Managing Director of EMEA Marketing, Ian Sutcliffe, Co-founder and Director of Valentis Advisory, and former Leicester, England, British and Irish Lions captain, Martin Corrie. Registration is free. We're looking forward to seeing you then. Thank you and goodbye.